What's going on, guys? How are you? How are you doing? This is Shocks and this is Shocks Capital YouTube channel. Welcome back. Today we're going to talk about moving averages, how best you can be trading your moving averages and what uses they are to you in your trading arsenal. So number one, we're going to look at how you can trade retests using moving averages. We're going to look at how you can identify trends, how you can identify targets, and how you can structure a strategy from moving averages. And I'm going to show you a moving average strategy in the video, and I'm going to show you how to identify trends, how to do retests, and everything that comes with moving averages. Before we go any further, let me talk about TIOmarkets, the broker that you should be using. You can trade anything with TIOmarkets, ranging from oil, gold, indices, and everything that you might think of. So TIOmarkets has a lot to offer when it comes to trading over 300 instruments in 5 markets: Forex, commodities, stocks, indices, and futures, you name it. So you can get your account, and remember, we are trading with zero commission, low starting amount. You can trade as low as $10, and you can benefit from spreads that range from 0 to 0.4 and things like that. And you can choose from a wide range of accounts that you can see. As you can see here, we have spreads, standard, VIP, and VIP Black, as you can see. So this is what you are doing. And if you want to be part of the TIOmarkets family like me, you can register your account and fund with minimum $10 in the description down below. Let's get it rolling. So let's go back to our charts and see how best you can be trading these markets, right? So we're talking about moving averages. Number one, remember I said moving averages will show you a trend, right? They will show you a trend, how best you can use or you can identify a trend. So the moving average that is best for identifying trends is the EMA 50, that is in blue on this chart, as you can see. So what do you do when the moving averages? So it's very simple. You just have to understand when the moving averages is above price action like this, you should be looking for for sell positions on the lower time frame. And when the moving average is trading below the price action like this, you should be looking for buy positions, because this is an uptrend on the lower time frames. And as you see, whenever price crosses a moving average and goes above, it signifies a change of trend. And what you can do with this moving average is you can then incorporate use of retests. And as price gets back to the 50, you might be actually entering your trades there. As price gets back to the 50 moving average, you might be actually entering your trades. Trade 1, trade 2, and trade 3. As it crosses, start changing directions. And as you can see here, this is GBP USD, and you are trading on this is the H4, and the moving average is trading above the price action. And this is what we are saying, that when the moving average is above like this, it means that price is trading downwards. So this is what we are doing. Then you can go to the lower time frames, right? So remember, we said it shows you trends. So even on the lower time frame, it will show you trends and how best you can be looking at it. So let's talk about a retest for a second. So how do we use retest when it comes to moving averages? So number one, remember, you are looking at the EMA 50 and the EMA 200, right? So the best moving average when it comes to retest is the EMA 200, which is in black on this chart, right? So how do you go about it? You wait for price to move below the moving average, then retrace back to the moving average and hook it. So the hook that you are seeing here is this one. So this hook here is your entry, or is your entry signal, because when price gets back to the moving average, it's supposed to retest and go in that direction that you are looking at. And remember, you need to utilize this moving average in trending markets. For example, break here and it goes away from the moving average. When it comes back to the moving average, which is the EMA 200, you get your retest there, and you go like that. And remember, this is the use number 2. And when we go to the other use, which we are saying it is targets, it means that we are looking at moving averages and identifying targets from from moving averages, and the best when it comes to targets is the EMA 800. Let me just load it and show you how to put these moving averages on a chart. You go to insert, you go to indicators, then since this is a moving average, right, you go to what? You go to trend, in trend, then you go to moving average, and you put in 800 on the period there, exponential close, and you change the color. Let's just put blue here. Okay, so this 800 EMA is the best for targets. Remember, we're saying the 50 is the best for trend identification, right? Then after identifying trend, we are saying this is the best for retest. So if price retests from this moving average there and goes up here, then it goes up because it would have retested. But if by any means it breaks this moving average, this 200, if it breaks the 200, the next target that we are looking for is the what? The 800 EMA as our target. And if we had a sell position, we might actually be looking at the 800 as the what? As the target or as the take profit, right? So let's go to this moving average, right? Let's see what is happening here. This is a price moving, right? So most of the times we can actually mark it out here as a what? As a buy there, and we'll be looking at going to the what? To the 800 moving average as our take profit, you see. So this is how best you can be using this. So it should be noted that when you are using the 800 EMA, as you can see in this picture, when you are using the 800 EMA, it's best used as a target when you are going against the trend. So the trend is sell, and that's why we are looking at this sell. And I'm actually in this trade. I'll show you a picture here. This is the sell that I'm actually in. And if you are to go opposite here, this will be the target, and this is how we would have done it. So that's number 2, right? So the next thing, that's number 3. The next thing that we are going to do is the what? Is the strategy. So we are going to be looking at a strategy that you can employ using the what? Using the moving averages. And this strategy involves 2 moving averages. That is the EMA 50 and the EMA 200. As you can see, we are going to be waiting for 3 things. Number 1, a formation of a peak, right? A formation of a peak. So this is the peak that you are talking about. So what is a peak? A peak is a double bottom, a double top, or a triple top, a half a Batman, or a head and shoulders. So in this case, we are having what? A double top here, this being the peak. So after the peak, what do you wait for? You wait for a crossing of the what? Of the 50 EMA like this. Then you wait for what you call the golden cross. So whenever the 50 EMA crosses the 200 EMA, we call that scenario the golden cross. So wait for the golden cross here. So this being the golden cross, what do we wait for? Price should go away from the moving averages, then come back and give us a setup on the what? On the 200 EMA. So this is called the safety trade, right? Because of its adherence to the trend. Remember, this is a trend following strategy that you are talking about. So when price moves back to the 200 EMA like this, we are going to be waiting for our sell positions at this particular price point and move away from that. So this is what we are doing. So I can show you some more examples of this. Let me show you what is happening on GBP USD here, and see if we could get this same strategy, this same setup. Right, number 1, what do we have? We have a half a Batman as our peak, and we have the golden cross here. So this is the golden cross when the 50 crosses the 200. Then wait for price to move away, then come back and retest the 200 EMA, and then expand. So this is the strategy. Let's look at another pair, maybe possibly this one. What happened yesterday? So we have the peak formation, and this is a triple top, a multi-session M formation, as you can see. And where's the golden cross? The golden cross is here. And where is the retest? The retest is right there on the what? On the 200 EMA. And this is how price would have expanded, going down, as you can see. So this would have been your take profits by virtue of it being the what? Being the low formation that you can see here. So let me show you all this one picture or so. Okay, so this is the Euro JPY. So I'd shown you this on GBP JPY, but you can show that this is the same setup on the what? On the Euro JPY. And if you have to explain it, you see that we have a peak formation, then we have what? We have a golden cross, Then we have 200 EMA, which is the retest, and as you can see, price is flowing the way we want it, right? So let me show you another example before we go on gold. Then we can be rest assured that we understand, and we can go and apply this setup as we go into our trade sessions, right? So number one, what do we see? Peak formation, here it is. Number two, what should we see? Golden cross, here it is. Number three, what should we see? This is what you should see, and price is just going away like that. So this is what we want to see, and this is how we are seeing it, and this is gold. And on gold here, we go to the higher time frame. You can see that price is retested from the what? From the 200 EMA, and because we haven't violated the 50 EMA here, we are still going to go down, and we are expecting price to go from here. And if we had the 800 EMA in question here, we could have been seeing it down here, and we knew if we had to take this trade, it would go right to our target, being the what? Being the 800 EMA. So guys, this is what I thought I could share with you, how you can be using your moving averages to profit in the what? In the forex market. Cheers. I will see you in the next video.